Welcome to the Deep Dive. We've got some really interesting material here today, pulled straight from a new market report.
That's right. And it gives a pretty sharp picture and some solid numbers for a market that's, really weaving itself into how we live.
So our mission really is to unpack the key insights, the drivers, maybe some surprising bits too, from this source material, all about the P2P rental apps market.
Yeah, and this report makes it clear it's already big business, and it's looking at some, frankly, pretty amazing growth ahead.
Okay, so before we get into that, maybe we should just quickly level set. What are we actually talking about with P2P rental apps?
Okay, yeah. So think of them like digital go-betweens. They're platforms letting regular people rent things, goods, or services directly from each other. They basically connect owners who have stuff sitting around.
Like underused assets.
Exactly. Underused assets with people who just need them for a bit, short term.
So tapping into things people already own,
Yeah.
essentially.
Precisely. And the list of things keeps growing. The source mentions the common ones like cars, holiday homes, tools, electronics, even clothes now.
Right. So names like Airbnb, Turo for cars, maybe Rent the Runaway for fashion. Those probably spring to mind for a lot of listeners.
Yeah, those are some big ones mentioned in the report. They really capture this whole sharing economy idea. It's about using resources better, cutting down waste, and just, sharing more.
Okay, that makes sense. So with that as the backdrop, why is this exploding? What's really pushing this market forward so fast?
Well, the report highlights a few key things coming together. A major one is just shifting consumer habits. People want convenience, flexibility, affordability. Maybe more than actually owning stuff, especially expensive things they don't use daily.
And I guess there's that growing environmental awareness angle, too.
Huge factor. Yeah. That consciousness about sustainability is definitely playing a big part. Renting things that already exist feels, more efficient, less wasteful. That really clicks with a lot of consumers now.
And none of this happens without the tech.
Right? Yeah. Absolutely critical. The mobile app is what you see, but behind it, it's the tech advancements making it all work smoothly. Secure payments, GPS for tracking.
Right, the trust factor.
Exactly. Trust and security, things like better user experience, easier transactions, that all builds trust between strangers, which is essential here.
And we're seeing this mindset shift impact, pretty major areas of life.
Yeah, the demand's getting broader, it's changing travel, Airbnb versus hotels, it's hitting transportation with Turo or Getaround as real alternatives to owning a car. And like you said, lifestyle things, fashion, home appliances, sports gear.
Is this mainly a younger generation thing, though? Millennials? Gen Z?
The report suggests it's wider than that. Sure, younger folks might jump on it first, but the convenience, the cost savings, that appeals across the board, even to older generations.
And the scale we're talking about here, the report had some really eye-popping figures.
It really did. So in 2024, the market size was already USD 18.1 billion.
No.
Globally.
Okay, so already pretty substantial.
But then look just 10 years out, the projection for 2034. USD 84.7 billion.
Wow. Okay, that's not just growth, that's massive expansion.
It works out to a compound annual growth rate, the CAGR, of 11.20% between 2025 and 2034. An 11% growth rate kept up for a decade. That signals something really big is happening, much faster than lots of older industries. It's set to more than quadruple.
More than quadruple. That really drives home the momentum.
Yeah.
So, okay, where is this growth concentrated? The report breaks it down, right?
Yeah, it does. By the type of rental, property rental had the lion's share in 2024, really dominant at 68.8%.
And why is property so far out in front?
Well, it's mostly down to the huge popularity of short-term stays, vacation rentals, Airbnb, Vrbo, Booking.com. Travelers just increasingly like the space, the flexibility.
It could be the cost sometimes, too. And that local feel.
Yeah, often cost-effectiveness, plus getting a unique local experience compared to a standardized hotel.
And the whole remote work trend must be feeding into that, too.
Oh, absolutely. People working remotely aren't tied down, right? So they're exploring longer stays, different places. That definitely fuels demand. Plus, just urban exploration, wanting unique trips.
And how are people actually making these rentals? Which platform type leads?
Right, so mobile apps are way out in front there. They had 64.1% market share in 2024. It really just boils down to having it right there in your pocket, the convenience.
Yeah, a good app experience makes it so easy, so fast.
Totally. User-friendly interfaces, booking in seconds, easy payments, messaging the owner in the app, location features. It's all built for mobile. It just fits how we do everything else digitally now, that mobile-first approach.
And who's actually doing the renting? On the end user side.
It's overwhelmingly individual consumers. They made up 76.2% of the demand in 2024.
So mostly just regular folks renting from other regular folks.
That's basically it. It just shows how widely this sharing economy idea has been adopted by individuals. People want that flexible, affordable access for short-term needs without the hassle and cost of buying.
Driven by things like, I don't know, people moving to cities more, changing jobs more often.
Exactly those things. Urbanization, more transient lifestyles. Plus, you've got digital natives who are just completely comfortable with this on-demand access model. They're all big reasons why individuals dominate the demand.
Okay, let's zoom out a bit. Globally, where's the biggest slice of this market right now?
North America leads of the pack. It held about 32% of the share in 2024, which translates to USD 5.79 billion in revenue.
And within North America, the U.S. is the main driver.
Yeah, the report specifically calls out the U.S., accounting for USD 4.01 billion of that total in 2024.
What gives North America that edge? Why is it leading?
Well, it's got a few things going for it. Mature tech infrastructure, generally higher disposable incomes than many places, a cultural acceptance, maybe even embrace of the gig economy and these sharing models.
High smartphone use, too, I imagine.
Very high smartphone penetration, yeah. And while there are definitely regulatory bumps, the environment has been, let's say, relatively more open to these platforms compared to some other regions early on.
But looking forward, where's the biggest growth potential?
The report points strongly to Asia Pacific. That's flagged as the key region for growth opportunity, projected to hit the highest growth rate. They expect it to reach USD 2.5 billion by 2030.
And what's driving that surge in Asia Pacific?
It's things like rapid urbanization, a fast-growing middle class with more disposable income, and also, in many places, maybe less access to traditional credit or capital, which makes renting things much more appealing than buying them outright.
Right. The report mentions cities like Mumbai, Sao Paulo, Nairobi as examples.
Exactly. Those cities really highlight the trend fast-growing urban centers in emerging economies where getting access affordably is just, paramount.
Now, this kind of explosive growth, it never comes without challenges, right? The report mentions opportunities, but also some significant hurdles.
Definitely. On the plus side, that expansion into emerging markets we just talked about, that's a massive opportunity.
And broadening the scope of what gets rented.
Yes, exactly. Moving beyond just places and cars. The report sees potential in tools, electronics, even niches like luxury goods. App-based tool rental for DIY projects or small jobs is taking off.
And technology keeps pushing things forward, too, not just enabling what exists now.
For sure. Continued tech innovation is key. Think about AI and machine learning getting better at recommendations, pricing, spotting fraud, or maybe blockchain for more secure, transparent transactions. And the Internet of Things, IoT, for tracking assets, checking their condition remotely.
Okay, so lots pushing it forward. What's holding it back? What are the main roadblocks?
The biggest one mentioned is really trust and security. It's inherent in the P2P model. Renters worry if the item's safe or as described. Owners worry about damage, theft.
Even with things like reviews and ratings.
Yeah, those help build reputation, but they don't totally eliminate the risk. And sorting out disputes when things go wrong between two individuals, that can be really tricky for the platforms to manage effectively at scale. They need super robust systems for payments, insurance, handling disagreements. It's tougher than B2C.
And regulations sound like a big headache, too.
Oh, yeah. Regulatory challenges and just legal uncertainty, that's a major brake on growth. There's no single set of rules. Globally, it varies wildly, city by city, country by country, especially for property rentals limits on days, zoning issues.
Right.
Plus, there's growing scrutiny around safety standards, insurance requirements for all sorts of rentals. The law's still playing catch-up, really.
It definitely helps to see some real-world examples. The report gave some specifics on companies doing well, didn't it?
It did, yeah. Fashion rental, for example, seems to have real momentum. Rent the Runway apparently boosted active subscribers by 40%. And another one, HURR Collective, saw a 300% jump year over year in items rented. That's huge.
And people are actually interested in renting clothes.
Seems so. The report cited a survey. 66% of millennials said they're open to renting clothes for things like weddings or big events. And speaking of weddings, another platform, Pickle, saw a massive 519% spike in wedding-related rentals just between 2023 and 2024, alongside a 300% rise in active users overall.
Wow, wedding rentals.
Yeah.
That's a really specific high-value niche. And cars. Car sharing's doing well, too.
Big time. Turo apparently hit over 14 million users in 2023, doing something like 1.5 million rentals a month. Getaround also saw rentals jump 50% since 2022. It just shows people are getting comfortable with car sharing as a genuine option, instead of owning, especially in cities.
And the list of players is getting long. The report mentioned Airbnb, Booking.com, Turo, Getaround, Vrbo, ShareGrid, Fat Llama.
Yeah, it's a competitive space, lots of players, and they're still innovating. The report mentioned things like more electric vehicles showing up on platforms like Getaround and Turo.
That's interesting. Two big trends colliding there.
Right. And another development is some platforms, even big ones like Airbnb and Booking.com, experimenting with subscription models. Pay a monthly fee for access to different rentals. That could change the business model again.
Okay, so let's try and pull this all together. After this deep dive, what does all this mean for you, the listener?
Well, I think it really shows how this P2P rental market isn't just some niche thing anymore. It's actively changing how we approach travel, accommodation, transport, even just getting access to everyday stuff.
It really highlights how these big trends, wanting flexibility, affordability, being more environmentally conscious, are meeting technology head-on and driving huge changes in how we behave as consumers.
Yeah, it's a real shift, isn't it? Away from needing to own everything towards just wanting access to things when we need them. That seems to be the core idea driving this.
This has been a really insightful look into the P2P rental apps market. We've covered its pretty impressive current size, those huge growth forecasts, the forces pushing it, and also the very real challenges ahead.
Yeah, it paints a picture of a really dynamic market, still evolving quickly and embedding itself deeper into our lives.
So given that rapid growth and how it's expanding into so many different types of items, here's something to think about. How much more of what we traditionally felt we had to own our cars, maybe even our homes someday, tools, appliances, how much more might we choose to just rent or share in the future?
Yeah.
And what are the bigger long-term implications for society if we continue this shift from ownership to access?